I'm joined by Wai Tuck. He's a currency strategist at Forecast. Wai Tuck, thanks very much indeed for joining as well. I mean, it is that GDP figure, I guess, that everybody's watching out for very closely today. What will it tell us?
Good morning to you. Yes, our focus will be on today's Q4 GDP. We are looking for 3.0%. But it's important to note that actually FOMC actually downgraded the outlook for 2012. They are looking for it to grow by 2.2 to 2.7%. So there's still a lot of downside risk. That's one of the reasons why Fed says that they'll keep rates exceptionally low through late 2014. From mid-2013. So there are concerns about the U.S. economy not really gaining momentum to reduce the unemployment, and there are also fears that inflation may fall below the 2% target.
Okay, well, what are you looking for exactly when it comes to this? And, if you're surprised to the upside when it comes to GDP, do you think the dollar gets a bit of a fillip?
I think that if it surprises on the upside, dollar will be supported as well. But on the other hand, there's also a lot of concerns about what's happening, whether Q4 GDP is actually so-called already in the past. Market players are actually looking forward to see whether the economy has continued to have momentum. But judging at things at the moment, I mean, despite some positive U.S. data recently, but yesterday house sales actually came down, and also jobless claim actually went up. So there's still a lot of concerns that the economy may not be strong enough to actually push forward the unemployment down, and that also that there will be more job creation, and that the U.S. economy may still struggle through 2012.
And I mean, you say it's a backward-looking indicator, but nearly all the indicators that we have are backward-looking ones here, so there must be some key takeaways that we get from it, and, may tell us something about what happens in this quarter. And, if you can put that into context of Ben Bernanke, the Federal Reserve Chairman, coming out and saying effectively that there will be QE3 later on this year, how does it all tie in together? Chairman Bernanke is actually opening the door for more QE3, and we have seen that he says that if, let's say, the economy needs some more stimulus, Fed is likely to inject more stimulus. But we do not know exactly when Fed is going to put in more bond buying purchase from the current level. But we think that Fed is likely to maybe do it in maybe April or May. To so-called support the economy. But this also reflects concerns about what's happening in Eurozone. I mean, not just U.S. economy itself. So if Eurozone still, so-called, the crisis is still ongoing, there's still a lot of pressure on the market. So we think that actually along the way, Euro will be coming under pressure, and you're likely to see dollar buying back again. Yeah, quickly on the euro, I mean, has it surprised you, the rally that we've seen in recent days, and you say it's going to come under pressure later on? What are your targets?
I think for 2012, the market has actually started on a so-called best scenario basis, hoping that the Eurozone crisis will be solved and the Greece stock together with the private investor PSI will be solved. But we have seen in the past that whenever there's one solution, another problem will crop up. And I'm not surprised to see that should the Greece deal with the private investors be actually agreed upon, there will be renewed concerns, maybe focus on other countries like Portugal, focus on other countries like Italy. So I think that Euro having hit 1 month high of 131, about 84, I think that Euro is coming down again. It's a sell and rallies market, so I see Euro actually breaking 125 again.
Thank you for that, to Wai Tuck from Forecast.